Paying someone to fill out your tax return can be expensive, especially if you have income from investment sources. While doing it yourself can be daunting, though, it's definitely doable. In this video, we'll walk you through filling out the investment portions of your tax return. Of course, if you're not familiar with the different kinds of investment income, be sure to check out our video on this topic first. So let's start with some good news. For those investments that are in an IRA or a 401k, you don't have to do anything. The IRS can't tax you on anything happening in them, so it doesn't care. Other kinds of investments do have to be reported, though. Thankfully, brokerage firms are required to report on your earnings, which actually makes things a lot easier for you. While things can vary depending on the circumstances, they typically issue a document called a 1099-B to both you and the IRS. This is an information return for broker exchanges, and works a lot like W-2s do for reporting employee income. You'll typically double-check this document against your own records and use it to fill in the investment parts of your tax return, which we'll talk about now. So starting with capital gains. If there are errors or omissions on your 1099-B, you'll need to start by filling out possibly multiple copies of Form 8949, which provides a lot of the same information that the 1099-B is supposed to. Ideally, this isn't the case, but either way, you'll use the information on these forms to fill in Schedule D. The first page of Schedule D is divided into short and long-term capital gains. There are mechanisms here for you to report a few other more unusual situations too, like gains and losses from certain kinds of businesses. You then fill out the second page, which gives you instructions based on the numbers you put in. You'll also probably be told to use a specific tax worksheet, but more on that later. Dividends and interest are usually easier to deal with. Qualified dividends are simply put into Field 3A of your 1040, while normal ones go in Field 3B. Meanwhile, tax-exempt interest goes in Field 2A, while taxable interest goes in Field 2B. However, if you have a lot of ordinary dividends and taxable interest, or if there's something unusual about that income, you'll also have to fill out Schedule B. The last tax-related filing thing that you'll need to do will come after you finish putting in all of your other income information and filling out the first page of the 1040. Without investment income, most people would just use a tax table here. But since long-term capital gains and qualified dividends are taxed differently, one extra step is needed. This is where you'll need the tax worksheet that you were told to use on Schedule D. For most people, it will be the Qualified Dividends and Capital Gain Tax Worksheet. You'll find it in the instructions for your Form 1040. This worksheet has a lot going on in it, and it might not be clear what you're doing at first. However, if you keep in mind the different kinds of investment income and tax regimes that we've talked about previously, it should be a little clearer. First, you'll see that the long-term capital gains from Schedule D and the qualified dividends from your 1040 are getting merged here, since they use the special tax bracket. Next, your ordinary income sources, wages, business income, taxable interest, ordinary dividends, and short-term capital gains, are being accounted for. This helps to figure out what bracket or brackets your special earnings should be taxed at. The standard sources of income are then set aside. After you finish calculating your special bracket taxes, you figure out the tax on your remaining income with the standard tax table. Taxes put a damper on the gains you make through investing, but filing them doesn't have to be miserable. We hope this video has made dealing with this a little easier, and look forward to seeing you on more videos going forward. Thanks for watching.